What's going on, Sean?
Todd, how are you? Thanks so much for being here, guys. Today we're bringing tips and tricks on how to win in the San Diego real estate market. And today we have Todd Pianin of Guaranteed Rate helping us navigate now that we're, 2 months into coronavirus, COVID-19. And now that we're starting to see some normalcy, Todd's going to help us out in kind of figuring out what's going on in the mortgage market, what do we have to look forward to, and where might there be opportunities? So Todd, thanks so much for being with us today. We really appreciate you being here.
Thanks for having me, and I always love talking with you, Sean. Love talking mortgage.
There you go. There you go. So, we're getting a lot of questions from our clients, and you're the guy to ask. I kind of want to get some intel on what's working and what's not out there in the market. The first topic that we have actually paid a lot of attention to, because we're all about data and stats, are, we're looking at showings in San Diego dramatically increasing day after day after day. So one of the hot topics in a leading indicator is that translating to new mortgage applications for purchases? So tell me a little bit what's going on at least in Guaranteed Rates world, or what you're seeing on a national level as far as new mortgage applications opening up, because to me and to a lot of smart people, that seems to be the future indicator on where the real estate market is going.
So I can't tell you applications opening up. What I can tell you more about is locks, because that's what our CEO shares with us. On a national scale, every month the lock volume is getting greater and greater and greater. I think this month they're projecting something like, I want to say 7 billion in locks.
Wow.
Last month was like 6 billion.
Sure.
So every month it keeps getting greater and greater and greater. So I can tell you on a local level, we're seeing, for a while we saw nothing, meaning like we weren't seeing any purchase activity. And I would say over the last 2 or 3 weeks, we've locked in about probably, I would say 2 or 3 a day of purchase transactions that are happening.
Gotcha. Okay, so you guys are kind of getting close to where you guys are normally trending at this time of the year, it sounds like, right?
Yes, it's starting. I wouldn't say exactly where we would be this time of year, but I would say that it seems like it seems like we're getting more purchase velocity, is what I would say.
Awesome. Good to hear. I mean, that's good. We're always focused on, people are always asking us, what do you think is going to happen? And I always tell them the best way you can figure that out is, are listings selling, are properties getting showings, are mortgages being taken out on properties? That to us is kind of like what we know about 30 to 60 days in advance of now when people ask us about our crystal ball. So tell us a little bit.
Is that like they say, follow the data?
Yeah, exactly. Follow the data. So we've been in lockdown now. We're going on, actually, I think today is about 2 months for most of us.
Right.
You and I made a video like this several weeks back, kind of in the middle of the whole pandemic portion. It seems like a lot of business in our world is trying and crawling back to normal for as much as possible. What are the biggest changes that you have seen since the beginning of COVID to now in the mortgage world?
Biggest changes, jumbo, I would say, is a huge change, right? And also the non-QM business. I would say those are the two biggest changes we've seen that have taken place in the market.
Okay.
Meaning that a lot of jumbo lenders have left the market. A lot of big banks are expecting big deposits for people to get loans at their banks. Fortunately for us, we've got investors that we don't have that kind of, we're not constricted by that as much, which is good. But the non-QM, I would say that was probably the biggest devastation, and it's slowly coming back, but not at the rate that I think we would want to see it coming back at. And what I mean by non-QM would be like the bank statement loans or money in the bank, that kind of stuff.
So who's your typical customer who is getting that before, who's having trouble? Is that like a self-employed borrower? Who's the demographic who would be most affected by that?
So I would say we did a lot of entertainment. We've done a lot of entertainment industry people. So a lot of those people were, especially with the shutdown now, that hurt their business entirely. So we would do bank statement programs for a lot of our celebrities. I would say a lot of retired people with a lot of assets. That would be another, don't have a lot of income coming in, but have a lot of assets in the bank. Sure. Those would be people that we would traditionally be using. Or I would say, a lot of the self-employed individuals who don't report a lot of money, who make a lot of money, cash flow wise, but maybe it doesn't translate to what they actually pay on their taxes.
Gotcha. So, I mean, I know locally that's a good chunk of the market that's there. Are you seeing options starting to open up for them as the weeks go by, or is it still pretty tight and locked down there?
I mean, I would say that we are seeing lenders come back, but at much lower loan to values. Like we were getting to bank statement loans where we could go up to 20% down on a bank statement loan to $5 million. Now we're seeing the bank statement loans come back, but really the client has to put down like 45%.
Gotcha.
That type of situation.
Okay. Now you hit on two of my other questions. We talked about a little about non-QM, which, you know we see a lot of that in the marketplace. Tell me a little bit about jumbo. A lot of our clients we work with on a regular basis are in that jumbo market. Mm-hmm. Explain a little bit, where is the jumbo today? So what price points are we talking about? And as well as what are some of the requirements that are today's requirements for someone to qualify for a really good rate jumbo product that's out there today? So,
well, reserves, lots of reserves, meaning at least, a year, 2 years, 3 years. High FICO scores. Most jumbo lenders have now increased their FICO limits to 720. We still have an investor that will go to a 700 for a jumbo. Down payment, minimum 20% down, except we do have an investor that will go with only 10% down on a jumbo loan, which a lot of people don't have. But I would say, and a lot have left the business, right? So your choices are limited, and even though your neighbor may be getting a very low interest rate on a conforming loan, right? You're not seeing those same similar low rates in the jumbo space that you would see in the conforming space. Normally, there's usually about, I would say, a quarter to maybe a half point difference between jumbo rates and conforming rates. And in some cases, we're seeing rates close to that for really well qualified borrowers, and we've got a lot of assets. But I would say that there's more of a disparity, probably almost 3/4 of a point difference between the two right now.
Now, let's touch real quick, just for a lot of the folks out there that aren't in the jumbo space, that are kind of south of $700,000-$800,000, which is a lot of our entry-level price points here in San Diego. Tell us a little bit about that market and what you've seen change and what's good there.
Well, I mean, first off, the VA borrowers, we're seeing the best rates we've ever seen in the VA market. I mean, we're seeing rates very, very low, is what I would say. Yeah. FHA, same situation, 3.5% down. With FHA, you're getting a really, really good interest rate. In the conforming space, under the high balance limitation, under the high balance loan amounts, you're seeing really, really good interest rates. So I would say that your typical buyer is really going to be able to afford more today than they could have actually afforded 5 months ago, 4 months ago.
Sure.
You can spend more on a house.
Quick hit here on, we've talked about what's gone away. Is there anything that you've seen that's come to the market opportunistic for people that they could be taking advantage of, whether it be refinances or stuff that HELOCs or stuff that's out there that people are able to take advantage of to help better their position going forward in the next few months? Are you seeing special loan products that haven't been available and now are? Are you seeing anything that people can take advantage of in the market today that might not be getting as much loud noise compared to all the negativity going on out there?
I mean, the only thing I can really say is refinancing. People don't realize that they may be at one interest rate and we can save them even a half a point or 3/4 of a point in where they are today. And so some people go, oh, I just did this 6 months ago. I don't want to go through this whole product again. They really need to take advantage of this time because rates are in that market. They can save themselves some money over the long term. Or if they decide to switch into a shorter term product, let's say a 15-year fixed, I mean, we're seeing really low rates. HELOCs, a lot of HELOCs have gone away. So people who got HELOCs should be really happy they got HELOCs. We have like 1 or 2 investors left in the HELOC market. So I would say that's not an opportunity. But I would say that, like, for us personally, our refi volume has just gone, we've had a second wave of new people calling us and getting refinanced right now.
Awesome. So our last topic today.
Wait. So one comment I want to back up on is also for your investors, right, Sean? I know you deal with a lot of investors, And so a lot of times they go, oh, well, it doesn't make sense for me to do that. We're seeing investment property rates really low. And so if I was an investor right now, I'd be looking at buying property to invest in that conforming arena. You're going to get a really, really good rate. So that means, versus what you're going to get for rent, there's going to be some really good upside.
Yeah, I've been hearing a lot of people kind of come out of the woodwork who are investors on the sidelines who are like, I want to take advantage of now. How do I do it? And we're having a lot of those phone calls. Our last topic that's been kind of, I think, one of the most misinformed topics that's come out since this all started is mortgage forbearance. What are you seeing that impact the borrowers that you're talking to? What impacts are you seeing that on the mortgage world? I know it has a lot to do with loans that are already fulfilled, but what are you seeing in the mortgage market today? Because we're getting calls all the time about people just going, should I not make my payment? Should I, what's the right thing to do? And there's so much variance of information out there. What's kind of like some rules or guidelines that we can tell people to kind of stick to when it comes to considering that topic? And is that even something they should be considering?
Well, I mean, I would say if someone's affected by COVID-19, they should call their servicer immediately, and they should find out what options they have for themselves to do. There's a lot of new data that's coming out. There's a lot of mixed messages that have been sent out by competitors of mine that haven't even been written by Fannie and Freddie yet, and they're saying you can't refinance for 12 months, you can't do all this, you can't do all that, or all I will tell you is nothing right now has been put down in writing and the guidelines have not been met. But if you do have a situation where you've been affected by this pandemic, I'd pick up the phone, call your servicer, and talk to them about what your options are.
Okay, gotcha. So it's just basically staying in communication.
Yeah, and I won't come out and say like what I think is going to happen, how it's going to affect people, because I don't want to scare you one way or the other. There's a lot of people out there who are doing that right now, telling you, don't go into forbearance, or go into forbearance, or you may not be able to refi for 12 months. I don't know what's going to happen because Fannie, Freddie, FHA has not come out with strict guidelines. We're supposed to get something this week or next week from Fannie or Freddie, and then I can talk to you more intelligently because I'll have the real information. But I wouldn't be listening to anybody right now who's telling you anything without talking to your servicer. Talk to your servicer. That's the most important thing to do.
That's a great message. Well, Todd, I just want to say thank you. You've shared some really valuable information. It sounds like things are really picking up in your world. I know they are in ours. And we really appreciate all the tips that you've given us to help our clients win today in this market. If you guys are looking for Todd's information, we will attach this below in the video that you're watching here today. Todd, thank you so much. Todd Pianin, Guaranteed Rate. We really appreciate all you do for our clients, for us, and the community. So thank you so much for being with us here today.
Thanks for having me, Sean. Love talking with you. Love all your clients.
Thanks, man. Have a good day.
You too.